Hi, I'm Nicki. I'm a business manager at Swig Finance. I joined Swig as a startup loans manager in 2021, having previously worked in small business banking for around 8 years at a big high street and international bank. Throughout these roles, I've been supporting small businesses with their banking and finance needs. I wanted to talk to you today about the importance of having a strong rationale for funding. From a business perspective, it's important that you have researched how much money you need to support your business to allow you to realistically implement your plans. For instance, if you're making a purchase, such as for equipment or investment in new stock, how much are these going to cost you to actually buy, receive, and start to make use of? Will there be any additional or hidden costs, such as VAT, shipping, staff training, or marketing? And if so, what do these costs look like and how will you fund them? If funding for working capital, what type of costs do you need to cover? Payroll, payment to suppliers, general overheads, etc. Here, your cash flow forecast is key as it helps to identify how much you realistically need available for this purpose. If seeking finance to help you move to a new premises, whether this is your first or if you're moving location to suit business needs, have you taken into account and researched all costs? Will you have a deposit and upfront rent to pay? Are there refurbishment, refit, or equipment costs which need to be met to allow you to start to trade from your business's new home? Estimating these can be useful as a starting point, but you should undertake research and obtain prices to help determine how much you'll actually need. Don't forget to include the VAT that's payable. This is important to get right, as overborrowing could leave you paying more in fees and interest and can also be a detractor for a lender looking at your application, whereas borrowing too little could leave you unable to pay essential business outgoings. By insufficiently researching the costs involved, you may have a nasty surprise and could find that you haven't budgeted enough to achieve your plans, which in turn could leave the money that you do have tied up but not being productive for your business. As a lender, we like to see that you have a good understanding of your business finances and that you've researched and can quantify how much you need in order to complete your project. In part, this helps the lender to demonstrate that the funding is suitable, both in terms of facility type and amount, but it also helps to give confidence that you do understand your business and your funding requirements. Hope that you found this useful.